Hi guys, this is Ch3. Welcome to a new video of my forex trading course. In this video, I'm gonna be talking about consolidation areas right at the dynamic area of support and resistance, and how we can profit from those consolidation areas, really tiny consolidation areas, rather on the trigger chart than on the setup chart, and how we can profit from those from the breakout of those consolidation ranges in order to ride ride a whole new swing in the direction of the main trend for a profit. Okay. We've already seen a video, okay, we've already reviewed what ranging consolidation areas are, remember those triangles, those ranges, flags formations, etc., etc. However, before we were looking at them as an area, as a congestion area in the setup chart in order to, well, if the trend is basically down and price gets within a consolidation area, we are gonna be looking to try the breakout to the downside, okay, hoping for some profits, okay. Well, in this case, we are not going to be looking at ranges as a price pattern, but rather as a trigger in themselves, okay. Sometimes when you have a nice trend in a scenario such as this one, as per my moving averages, sometimes as price retraces back to the dynamic area of resistance, in this case, since we are in a downtrend, it simply reacts of it. It gives out a clean signal. You get the let me clean up the chart a little bit. Up on the breakout of the retracement trend line, or actually a flag formation. Well, this is rather a flag formation. Remember, we were just now mentioning them. Okay, on the setup chart, well, this is a clear flag formation. Okay, up on the breakout, you have a nice swing to the downside. Okay, well. So as I was saying, sometimes price reacts very cleanly from the dynamic area of resistance, and therefore the entry signal is rather, like I say, clear. No confusion whatsoever. Your retracement trend line gives way, and bang, then there you go. In order to enter the market, okay. However, sometimes the entry signal in itself, it's not so clear. Sometimes price, if we are in a downtrend and our 30 and simple moving average, this is the dynamic area of resistance. Sometimes as price is swinging, it gets back to the dynamic area of resistance, and price doesn't quite react immediately of it, okay. Instead, it enters a period of consolidation, all right, of basically sideways price action before deciding which way it wants to go, either to the downside or to the upside, okay. Always please remember that whenever you face the dynamic area of support and resistance in a trending scenario, that's a decision taking area, all right. Especially, of course, as usual, if you have a confluence of different elements of support or resistance packing up within few pips of each other at that precise level. That's a decision-taking area, like I say. It's an area where the market has got to decide. Okay, imagine it retraces back here. It's got to decide whether the trend is to continue, and if it is to continue, most of the bounces will happen around this area, okay, in order to, basically resume the downtrending mood in this market, and therefore scoring new lows in this downtrend, or whether the bears have had enough on this trend, okay, they've made enough profits, and therefore they give way to the bulls, so they can gain some ground, okay, and therefore pushing price to the upside. Basically, this area, as we can see in this chart, is the area that sort of defines whether the downtrend is to continue, and if it is to continue, it should bounce down from this area, okay. Or if it is to break, it will break this area, and therefore marching forward, marching north against the trend, and therefore, from a technical point of view, as far as I am concerned, calling it a day, you know, as far as the trend goes. Okay, so like I say, remember that the dynamic area of support and resistance is a decision-taking area. When price in a downtrending or in any trending scenario retraces back to it, you know, the market sort of enters a battle. Okay, whether the trend is to continue, or, you know, to continue down, or whether it is to breach through and therefore jeopardizing the whole trend. Okay, so as price retraces back, we are now going to be focusing on this swing here, on this whole swing back here. As price retraces back, okay, to the decision-taking area, okay, which is this area around here, the market has got, like I say, has got to decide, and sometimes that decision is not so clear, and therefore we don't get a U-turn, such as in this case, but rather we enter a period of sideways consolidation. Okay, it's too tiny, that consolidation area, to be spotted on the setup chart. If we could spot it on the setup chart, then we would be talking about simply a price pattern, okay, as we saw in the previous videos. But in this case, like I say, it's not that the whole market enters a congestion area, we will enter a congestion area as far as the entry in itself goes around this area of decision taking. Okay, that's why the congestion area will definitely be so small that you would assume into the shorter time frames in order to to trade it, and we're gonna take the breakout of that congestion area as the entry in itself. Okay, in this downtrending scenario, just as the congestion area takes place around the dynamic area of resistance, the breakout will signal the entry. Okay, let me rephrase that. The pattern, the pattern that we are trading, the type of trading we are taking here, it's still a swing trading type of trading. Okay, it's not a pattern breakout trading. It's just that the breakout of this congestion area will signal our entry. Okay, so as I was saying, I'm sorry if this sounds a little bit confusing. Let me zoom in now into the short time frames, and I'm sure you guys will understand what I'm talking about here. Okay, right. Price retraces back as usual. We zoom into the shorter time frames in order to search for, well, for a reversal formation as usual, and now we go into the short time frames, into what I like to call the trigger chart. Let me zoom forward. Here it is. Here it is. All right, and as we can see, as price, remember that the dynamic area of support and resistance was resistance in this case was basically coming around this area on the setup chart. Okay, so we can see that price basically enters an area, okay, of sideways consolidation. The bounce, okay, from this retracement up wasn't that clean. We did not just touch the dynamic area of resistance and swing down from it. In fact, we've entered, like I say, actually let me mark it with actual trend lines. Okay, yeah, whoops, 1 second guys, let me readjust it there, and now we have the top band of that channel. All right, so as you can see, as this swing has as this swing has retraced back to the dynamic area of resistance, as I'm saying, instead of getting a U-turn of it, okay, instead of reacting very quickly of it, in fact, what we've just gotten is it's a ranging consolidation sideways. The entry signal, it's not so clear here, is it? You don't get a typical 1, 2, 3 formation or a head and shoulders. You don't get a clean trend line breakout. I mean, you do get the trend line breakout, but then price sort of meanders around. It's not so clean. In fact, we've basically been moving in the trigger chart. We see that we've been moving sideways. Some heavy decisions are being taken around this area. Okay, some heavy decisions are being taken at this area. If price shoots to the upside, we know that for the time being we don't want to take this entry. However, if price breaks below this congestion area, chances are the trend will continue. Okay, the main trend, as per the setup chart, will resume its downward sentiment, and well, therefore it's rather safe, or a short entry should carry higher chances of success. Okay. Now, as usual, there are two ways to take the entry, okay, of the breakout of this congestion area. One, the aggressive way, as you guys know already, we've already reviewed that on a previous video. You simply place a sell stop order, some pips, 5-10 pips, depending on what time frame you're trading, below the lower band of the congestion area, and as the breakout takes place, you will be automatically filled short in this trade, or you wait for the breakout pullback continuation. However, when we were talking about price patterns on the setup chart, I was always advising you to wait for the breakout pullback continuation, okay? However, in this case, it's not so bad, or it's not so aggressive to simply place a sell stop order, like I say, few pips below the range bottom, because at the end of the day, congestions are so tight. Okay, remember, we are talking about the trigger chart here. Okay, we are not talking about the setup chart. In the setup chart, if you're spotting a congestion area in the setup chart, you definitely want to be requiring a breakout pullback continuation pattern in order to enter the trade. If the congestion area happens in the trigger chart around the dynamic area of support and resistance, and we are using the breakout of that congestion area as our very entry signal, it's not so bad to simply place a sell stop order a few pips below, beyond the breakout point. Okay. Like I say, the ranges are so tight and so small that sometimes you don't quite get the breakout pullback continuation. In this case, we did get it, okay? We did get it there, but sometimes in this type of setups, you don't get it, all right? So it's not such a bad idea to simply place a sell stop order few pips, let's say 10 pips below, depending on what time frame you're trading, okay? Let me now show you another example. Well, of course, I didn't mention it, but of course, if this area breaks to the upside, it's rather obvious that you don't want to be taking that breakout. All right. All right. Now let me show you another example. In this case, I'm gonna we are looking into the Canadian dollar against the CHF on the 4-hour time frame, and all the nice uptrending scenarios per the moving averages. Swing information of the dynamic area of resistance. There is a crossover there, but for the sake of this video, let's not pay attention to it. Okay. I'm gonna be focusing now on this swing down here. Price simply, like I say, let's not pay attention of that crossover. This is just this video. I'm not reviewing any actual trade. It's just a theory video, and I want you guys to understand the concept. So I'm gonna use this video nonetheless. All right. Okay, I'm gonna be focusing on this swing up and then on this retracement down back to the moving averages. And well, price, once it retraces back here, now we would, as usual, zoom into the short time frames, see what's panning out there, in order if we get some indications that price might be turning around, and therefore we can join long for a new swing to the upside. All right. So let me zoom into the trigger chart. In this case, the trigger chart will be the hourly time frame. I'm scrolling back. There it is. I'm scrolling back in my charts, and I find this is the retracement I was talking about. Okay. Price, as we saw on the setup chart, retraces back to the dynamic area of support in this case, since we are in an uptrend. And as you can see now on my screen, in the shorter time frames, we enter another area of congestion, but in this case in the shape of a triangle. All right, a very clean triangle. All right. As usual, what we will be looking for is to trade a possible breakout to the upside price retraces back to this decision-taking area. A little bit of meandering of indecision, let's say, takes place here. The market still doesn't quite know whether it wants to continue with the trend or whether the trend has got to end and therefore breaking to the downside. We still don't quite know. So what we do is, as I was mentioning in the previous example, we simply wait. Okay, we mark our congestion area. In this case, it takes the shape of a triangle. It finally breaks up. Okay, we have the downtrend, the retracement trend line, the overall retracement trend line down there. We may want it to give way before taking an entry, so perhaps it might not be a good idea to enter the long entry right there as the triangle gives way. In fact, perhaps it would have been a good idea to wait for the trend line to give way. So we've had two confirmations. Firstly, this very short intraday price action, this triangular formation at a very decision-taking area, breaking in the direction of the main trend. We have few pips above the retracement trend line. Just for the sake of it, let's wait until that trend line gives way, and once that trend line gives way, bang, we've got green lights to simply punch the buy button. Okay, and well, there it goes. Okay, let me now show you another example, yet another one. Why not? In this example, we have another trending scenario as per the moving averages. Also, I'm gonna be focusing on this swing here. All right. Also, we have an area of confluence around there. We have the previous swing high. Former resistance now working as support. Also, we have a Fibonacci level at that level as well. It's the 61 Fibonacci level, which is actually holding price above, etc., etc. Okay, so price retraces back on the last swing, okay, in the direction of the main trend. We have a new swing making new highs. We go through the swing tops out there. We go through the retracement part of the swing, and then we don't quite get a clean pullback, a clean bounce like in here, right? We enter a period of sideways consolidation. Do you see that? It's just so tiny, okay, so tiny that you cannot quite see it on the setup chart. You've got to zoom into the short time frames, but the important thing is that it's taking place at a decision-taking area. Okay. So in order to verify whether we can profit from that or not, we simply zoom into into our trigger chart. In this case, the 15-minute chart. Let me scroll forward. There it is. Okay. This is the former swing up, then the swing down, and then we, as I was saying, we don't quite bounce up straight away. Okay, instead we move sideways, and once again, what we form, it's another clean triangle. Okay, very clear triangle. You can see that. Also, we have the overall retracement trend line somewhere around there, which actually gives way. Okay. It gives way. It's always whenever you are trading, you are swing trading, okay, trying to exploit the whole new swing in the direction of the main trend. It's always a good idea to wait, no matter what type of reversal formation you are trading, guys. It's always good to wait for the breakout of the retracement trend line. Trust me, it's a big plus. Okay, it's something you definitely want to wait for. Okay, it means that the bears that were basically retracing back price in this uptrend. Okay, the bears have been in control, at least from a temporary point of view, retracing back, pulling price down to support levels. And once the trend line gives way, it means that the bulls, which were in charge in the setup chart, since we are in an uptrend, regain control, and bang, price goes to the upside. The actual indication that the bears are running out of steam is the breakout of the retracement trend line. Okay, so always keep in mind you always want the retracement trend line to give way before entering any type of trade. Okay, right. So the even though the trend line has given way, the signal is not that quite clear. All right. Once again, we enter in a decision-taking area. Remember, we have a confluence. We had the Fibonacci level. We had the previous swing high, former resistance, now working as support, and in the dynamic area of support as well. So basically, we're at the decision-taking area, and the market is not quite sure which direction it wants to go. All right. It just doesn't want. It just doesn't know. At least from an intraday point of view, from in the trigger chart, we can clearly see this triangular formation. Okay. So as I was mentioning before, should the triangle break to the downside, the whole setup will be cancelled. No entry will be considered. If the breakout takes place to the upside, it's green lights. Okay, since we've broken already the retracement trend line, upon the congestion area breakout in the direction of the overall main trend, it's green light to trigger our long entry, and bang, there we go, another 80 pips to the upside. In this case, we do get the breakout pullback continuation, as I was saying in the previous example. Sometimes it does happen, okay, sometimes we get it, and well, you know, great, we have an extra confirmation that the breakout is valid. Remember that the breakout pullback continuation is nothing but the confirmation of the breakout, okay? So, you know, once we see this breakout pullback continuation pattern, we have the confirmation that well, you know, this pattern is confirmed. Okay, this breakout of this pattern is actually confirmed, and we have green lights with all these elements in our favor. It's a high probability trade, like I say, good to go for 80 pips. But nonetheless, sometimes, as I was saying before, you don't quite get the breakout pullback continuation. It's such a small time frame. That sometimes you just don't quite get it. Okay, so it's equally valid to simply place a buy stop order 10 pips, 5 pips, 15 pips, once again depending on what time frame you're trading, and from that well, you know, ride the breakout in the direction of the main trend with the trend line, with the retracement trend and having given way, with the congestion area having given way as well in the direction of the main trend. A buy, you know, up on that breakout. Once all that indecision, okay, has actually you know, has actually broken in favor of the bulls, which at the end of the day were the guys in control in the setup chart. Okay, so that's why we are in an uptrend. So once this congestion area gives way, well, we are good to go to enter long, and like I say, ride a new swing to the upside for profits. Okay, that's basically for this video. To wrap it up, as usual, as price retraces back to the dynamic area of support and resistance in a trendiness scenario, you zoom into the short time frames and you simply follow price action at that precise level. Okay, this is the previous example I was showing you before, right there. What's price doing up on the pullback? Okay, price pulls back. What is it doing? Is it simply pulling a U-turn, such as in here? Or it's rather, you know, meandering sideways. We can clearly see the same phenomenon on the last example that we just saw. Let me clean up the chart. What is price doing? Okay, is it well, first of all, is it breaching through? Is it, if it does indeed breach through, I'm not interested in this setup. Is it, you know, simply bouncing, you know, in a V shape formation with a clean trend line breakout, etc., etc.? Then great, I'm good to go to search for an entry in the direction of the main trend. But what if it actually enters sideways, you know, a period of congestion, a period of sideways price action, and we don't quite get a clear signal? Well, in that case, in the trigger chart, as I was just mentioning, you want to mark the congestion area, and as the congestion area gives way, in the trigger chart, it's a reasonably safe bet that the new swing will, you know, it's about to spring off. Okay. Alright guys, that's all for this video. Just another type of entry. I wanted to mention this type of setup because they do happen. Okay, you sometimes do get this type of tiny congestion areas at decision taking levels. and that's why I wanted to mention how to profit from the breakout of this of those tiny congestion areas in the direction of the overall main trend as per the setup chart, in order hopefully to ride, for upon the breakout, to ride for a new swing to the in the direction of the main trend. All right, okay guys, that's all for this video. If there is anything you didn't quite understand about this concept, as usual, feel free to send me an email. I will very gladly get back to you as soon as possible. But as usual, the best thing you could possibly now do is to scroll back in your charts, okay? Search for those trending scenarios. Analyze the pullbacks, draw some retracement trend lines, some confluences of support and resistance, and see how price behaves once the retracement hits those areas of confluence of support or resistance around the dynamic area. See how price behaves around there, and always ask yourself those three questions. Okay, what's price doing? Is it either breaching through? Is it either bouncing back up, or is it moving sideways? Okay, and from there elaborate your trade plan. If it breaches through, okay, you don't want to take any entry, and if that level of confluence of support in this case, hold price above it, and if it begins to turn around, how can I search for an entry? Okay, what type of reversal formation can I profit from? Has my retracement trend line giving way? Great, that's always green lights, okay? That's always a big plus on my list. Am I finding a reversal formation, perhaps a 1, 2, 3 reversal formation, a W formation? Am I finding a head and shoulders? Am I finding a sideways price action in the trigger chart? If you find any of those reversal formations, once confirmed that the retracement trend has given way, upon the confirmation of that reversal formation, right there you are good to go for a long entry, for an entry in the direction of the main trend, because chances are that the new swing is on the move. Okay, that you are stacking up chances on your favor. All right guys, that's all for today. Bye bye.